What's up, everybody? Welcome back to Free to Be, and today we're going to be talking about investing in the stock market. Is it something you're ready to do? Do you need some information? Well, you've come to the right place. So let's get started. All right, now before I begin this video, I'd like to put a disclaimer out there. These are all just my opinions. Investing in the stock market is very risky, so please make sure you do so responsibly. Now, as always, if you're new to the channel, please go ahead and hit the subscribe button, turn on those notifications because the frequency of my uploads will continue to increase as time goes on. All right, so there's three major factors in determining if you are ready to invest in the stock market. I like to think of these three as things that you should check off before you actually take the plunge. The first one is actually making sure that the money you want to invest in the stock market is not the only cash you have available in your savings or any kind of cash reserves. As you guys know, life happens, and the worst thing you could do is invest all your cash into the market at one time. The problem is that, the rainy day comes along, you need some cash. If it's all tied up in the stock market, A, it could take you a couple days or longer to get that money out. B, you could potentially be hurting yourself and be in a position where the market is at an all-time low or something is going on with the stock that you own and you could actually experience a loss. So I always recommend that you have at least 3 months worth of cash saved up before you invest a penny into the stock market. Now, it would be helpful if you could have 6, but realistically, try to have at least 3 months worth of cash reserves before you start investing. Now, the second factor is one that's also as important as the first one, and that's making sure that before you invest in any kind of investment really, but the stock market, make sure that you don't have any consumer debts or any kind of debt in general that has an interest rate that's too high. And I would consider anything maybe 7, 10, 15, definitely in the credit card range of 17 to 25. Those are all bad interest rates. Now, the problem is you don't want to start investing and have the deck stacked against you, because effectively what you would make in the stock market in terms of profits and gains, you would be losing to that interest, right? If you invest $1,000 and that $1,000 nets you an amazing return of, let's say, 12%, but your credit card debt is at 15% or 17%, you're losing 5 to 7% still. So that's definitely not a good way to approach investing. I would recommend that you use that money that you want to invest to pay off some of those debts, and that's pretty important to do. Now, the third thing is not as important as the first two factors, but it's still equally important in my opinion, and that is determining the goal of your investment, right? Is it something that you're trying to do in a short period of time and hoping to get rich? Because in all likelihood, that's not going to happen investing in the stock market. So you should have a realistic goal. I like to put a 3 to 5 year plan in place when I'm investing in a particular stock or just throwing money out at any kind of investment really. So make sure you have something like that in mind so that you kind of know where you're going. You have to know the destination in order to be going on a functioning journey, in my opinion. All right, so you checked off the 3 factors we just discussed, and now you are ready to invest. So what do? Well, my recommendation is you spend a little bit of time and research different brokers. You're going to want to find a broker that doesn't charge a great deal in commissions for the transactions that they conduct. Now, some brokers can charge as high as $30, which is ridiculous because there are brokers that will charge much less. You can find one for $7, and I have a link down below of one that I recommend. It's Robinhood Investing, and they will actually do trades for free, no commissions at all, which is great for you because if you're investing a smaller sum of money, the last thing you want is any kind of profits being reduced due to commissions. All right, so you found the right broker. What next? Well, next you have to kind of identify what you're willing to invest. Is it $1,000? Is it $5,000? $10,000? Whatever that amount is, I recommend that you split that in 2. Invest half of it now and then wait and invest the other half 3 months or 6 months down the line. This way you can beat any kind of crazy turns in the market. If the market is extremely high at this time or if it's really low, you basically be hedging your bet a little bit. And I definitely recommend that you guys take that approach because it's something that'll work, and it'll also give you time to research. So if you have $5,000 and you want to invest in this one company, maybe invest $2,500 in that company. Let time go by. You can see how that one works out. And if you still want to invest that other $2,500 in the same company, you can do that. Or you might have been able to target something else that you want to go ahead and invest in. So you could take that $2,500 and move it and invest it in that second company. And really, without going further into the specifics of stocks, because I will actually be releasing another video that goes into the intermediate and expert levels of investing in the stock market, which will help you guys identify what stocks to invest in. You guys make sure you do your research before you invest in any kind of company or any kind of stocks. So, was this video helpful for you guys? Let me know down in the comments below. Again, I appreciate you guys joining. Don't forget to hit the subscribe button, and we'll see you next time.